All right. So let's see what's going on in the markets. So today is June 30th, the last day of the month. And with me in the studio is my head coach, Markus. Good morning, Mark.
Hey, good morning, Marcus.
Well, last day of the month. Can anything stop this market from going higher?
We shall see. We shall see.
I mean,
Interesting month.
so it was a great month, right? Because yesterday the S&P 500 inched out another record high, barely, but they did, right? So with closing higher at 0.03%, a point higher, so a new record high with 1 point. And I mean, thus far the S&P is up 14.26% for the year, so that's not
Not
bad
too
at all.
shabby.
Um,
Yeah.
Take a look at the Nasdaq. Nasdaq also yesterday new all-time high, right?
Yep.
And
Nasdaq. Big comeback.
yeah, big comeback. Where are we there for the year? Let me just quickly see. The Nasdaq is up 13.7% for the year. Okay, let's take a look at the Dow. What's happening with the Dow here? The Dow is like it's behind. It's still not making new all-time highs here. Up for the year 12%, so a little bit trailing here. What's happening with the Dow, Mark?
It's trying. It's trying. It's like that little engine that could, but right now it can't.
Yeah. So anyhow, it looks like a great quarter and a great first half of the year. So I mean, let's talk about what's moving the markets these days. We had all these inflation readings, but it seems that investors are shrugging it off and just keep buying stocks in the hopes of economic comeback, right? I mean, it seems that we're reopening the economy. It seems that the Federal Reserve also says, okay, everything is cool. We will maintain our easy money policies. So, what do you think here? What's happening?
Yeah, I really just think it's right now, reopening of the economy, like you said, and the Fed, right? As long as the Fed is still, not pushing for tapering, which was a bit of a surprise. I think everybody or most people thought that they would really slow down their bond buying purchases at the last meeting, or mention it, and they just really shook that off. They did, mention that interest rates, their expected interest rate increase would be sooner than expected, but we're still talking 2022, and a lot can happen. So as long as the Fed is still maintaining their policies to try and promote the economy, or help the economy, I think that the economy can do well.
Yeah, and we've talked about it. The Fed has two goals: keep inflation under control and
Yep.
low employment. Now, inflation we have seen going up, and they are okay with it because recently we also saw an uptick in unemployment. And this is when we looked at the weekly claims, and we have more unemployment claims coming out tomorrow. And then the big one is obviously the jobs report on Friday. And I think that this is what right now the Fed is waiting for. So, do we have another uptick here, or what is happening? And that's probably why right now they say, oh, no, no, no. We keep doing what we have been doing.
Well, and today's ADP non-farm jobs came in at 692,000 new jobs. So this is the private sector, excluding farming and government jobs. So that was higher than forecast. 555,000 jobs are forecast. But last month, actually, it was 900 something, and they revised that to
Yeah.
886. That goes back to May.
Yeah.
So
And then yesterday we also had consumer confidence being released, and consumer confidence came in really, really strong, right? I mean,
yep.
previously it was at 120, it was forecasted at 118.9, and then it came in at a whopping 127.3. So, I mean, consumer confidence is strong. Seems that jobs are strong. So, at some point, the Fed needs to acknowledge this, that we're doing good. And then, hey, we saw it as soon as they started talking about well, we might actually do something earlier than planned. The markets were really super, super nervous about this. But right
Well,
now, up and away.
yeah, yeah, and I saw an interesting comment, and what was it? There are 3 million hires this year,
Uh-huh.
though that still leaves about 7 million who were working before the pandemic hit without jobs.
Hmm.
So 3 million this year, but 7 million, and that's where the employment picture is really an interesting and tricky situation because you have a lot of low paying jobs people don't want to go back to,
Yeah.
and you have people who have been at home who've decided that they want a career change or they don't want to go back to the workforce, or not necessarily the back to the workforce, but back to the job that they had. So these ADP non-farm jobs was helped out by a boost in hospitality, which would include bars, restaurants, and hotels. But you have a lot of people who worked in the bar, restaurant, hotel industry that are now, after being home for a year, wanting to do something different.
Yeah. All right. Well, let's take a look at a few stocks. So this morning on the move, did you see this? SPCE. SPCE space, Virgin Galactic actually, that recently was just skyrocketing higher. Yesterday already moved lower. So yesterday lost 14%. And this morning, pre-market, it seems that another 6.2% down. And I mean, this is interesting because they received FAA clearance to go into space, right? And this is where the market rallied, but now, well, there's a cool down period. Do you see what happened?
I see the move. Do you know of anything specific driving that?
Well, here's basically this morning, Bank of America double downgraded the stock to underperform from buy. And you see, usually it's a buy, hold, and then it is underperform, I believe. So they downgraded it by 2 steps because they say, you know what, with these prices, I mean, this move of going into space was factored in and then some. So this is way too high. They believe that a more reasonable price target is here in the high 20, lower 30 range. So this is why space that has been just skyrocketing higher right now, retracing back. So it seems that it'll kiss the 40 level here in a little bit. We'll see.
Yeah. Bed Bath & Beyond reported earnings.
Hey, there's a meme stock back. Oh my gosh. Yeah, they reported earnings. What happened here? Oh, they're up 2% this morning.
They said the sales were better than expected, but they missed profits. Said the cost of trying to get business back, and which included marketing, was higher, and that kind of hurt profits there. But they did raise their full year revenue outlook. So it's hard to. Really,
I mean, this is where this stock is less affected than some other meme stocks that are completely decoupled from any fundamentals, right? Like AMC or GME, or then we had recently Clove. I mean, here with Bed Bath & Beyond, I mean, it does make sense that the stock is moving higher if they missed the profits here. But if they say, you know what, our outlook is good, that's what most investors want to hear. Okay, what do you think for the second half of the year? And this is why they said second half of the year will be good.
Exactly, because you're buying stock not for what it does today, but what you expect it to do in the future.
Yeah. All right. What else is moving this morning?
Well, it's a big day for IPOs.
Okay, who is IPOing today? I didn't see that.
So I think it's Diddy Global. They're set to begin trading on the New York Stock Exchange. They've priced their initial public offering at $14 per share, which would raise $4.4 billion, and that gives the China-based ride-hailing company an initial valuation of about $73 billion.
Yeah.
So if you don't know,
DIDI?
I think it is. I believe it is DIDI.
Yeah.
And if you don't know what this company is, it's essentially the China Uber, and it literally is the China Uber because they bought China's Uber in 2016. So they were competing for market share, and they won. So they bought out China Uber. Uber actually owns about 12% of this company that's IPOing today. And this would be the biggest U.S. Share sale by a Chinese company since Alibaba raised $25 billion back in 2014.
Wow. All right, already popped over to LVS, Las Vegas Sands. Because speaking of Asia, yeah, go ahead.
Well, yeah, I think you might have some news here that I don't.
Okay, yeah. So it's up this morning, 1.8%, and this was basically following reports that the border restrictions between Hong Kong and Macau will loosen in mid-July. And currently, any traveler from Hong Kong to Macau is required to quarantine for 14 days. And Macau is where lots of casinos are. So this is where,
Gotcha.
I mean, Las Vegas Sands, of course, they are in Las Vegas, hence the name, but they're an international, worldwide operator of casinos. And so
Sure.
they have been hurt with the new variant coming out, right? The Delta variant, where everybody thinks, okay, travel restrictions might be actually tightening up. I mean, here in the US, they're pretty loose. You can now travel wherever you want. But internationally, it is still a problem. And here again, between Hong Kong and Macau, the quarantine might be lifted instead of being quarantined for 14 days. And this were a little bit of a jump here this morning for LVS, which we need because we both own LVS. We own shares in LVS. And we own it at a price. I own it at $58. What about you?
Yeah, I'm at the same price. Of course, we've sold a lot of premium, but yeah, I'm ready for this one to get a little pop here.
Yeah, that wouldn't be bad at all. Okay.
A few other IPOs.
Oh, yeah, go ahead.
So, Clear.
Okay.
This is they're set to trade on the New York Stock Exchange after initial public offering of 31 per share, which would raise about 400 million. They're known for its frequent flyer identification service. Do you have Clear?
I love it. Yes, I have. And we have it here in Austin. So it's super,
Okay.
super easy because TSA Pre is getting really, really crowded. And Clear allows you to even cut before the TSA Pre line. So you have the regular line, you have
Yeah.
TSA Pre, and then you have Clear. Yeah, I'm loving it.
Nice, nice. Yeah, flying out of Sacramento, I know it's it's there, but I haven't flown much since the pandemic, and it's pretty easy to fly out of Sacramento, so I don't have it, but I was wondering.
Yeah.
So they're gonna IPO today.
All right. Cool. Let's talk about the housing market for a moment
Yeah,
because so yesterday the what is it called, the Case Shiller Index has been released, and
yeah,
I mean, boy, it is just rising at the fastest pace ever,
yep,
coming in at a blazing 14% year over year. I think it was 14.6%. So this is
yep.
housing prices, right? And I mean, these were some home prices in cities like, for example, Phoenix, San Diego, or Seattle. They are up more than 20% over the year. And we have talked about this. So this is where we just have this disconnect. We have the huge demand because we have mortgage rates are still at all-time lows. I mean, it has never been cheaper to borrow money to buy a house. Then, as we know, consumers have pent up cash from the pandemic because we have all the stimulus checks that went out, and builders are facing shortages of both labor, we talked about this earlier, and also materials because it's not easy to get materials right now. It's horribly expensive. So they're waiting out. So this is where we have kind of the perfect storm happening here. So we have higher demand and we have a lower inventory. And this is where, wow, it's rising quickly.
Yeah, and I saw that the National Association of Realtors, they said that most of this is being driven by first-time home buyers,
Yeah,
which I thought was interesting.
I'm not
Yeah,
surprised. I
and
mean,
that
why
the
wouldn't you jump on it, right?
yeah,
If it is cheap.
yeah, and the median home price is now at an all-time high of 350,000 for
$350,000.
existing home sales. Yeah,
That is super high. I mean, I just saw
well, which
here
is a great price in California.
the other day I saw
Super
in my
cheap in
neighborhood,
California.
they're building a new subdivision here in around where I live, and they said homes starting at 700,000 in a
Wow.
subdivision. I mean, this is for Austin. That's a lot of money. So we will see. We will see if we are running into a bubble here. It seems that thus far everybody says no, this is not a bubble. This will continue. I mean, this is right now the opinion of professionals. But it's always concerning when it is rising at the fastest pace ever, because
Yeah,
as we know, when we have these meteoric rises, this is when we usually see this going down. We have seen it earlier here with SPCE, right?
sure,
Or I don't know, anything. What
sure.
goes up like this usually comes down fairly quickly.
Exactly.
All right. Anyhow, so this is what you need to know, what is happening in the markets right now, what investors are paying attention to. Hey, if you enjoyed this, give us a like and we will see you in the next video. Oh, by the way, there's probably some videos popping up Might want to watch these. They're really good. Okay, have a great rest of your day.
Happy trading, everybody.